Hello, and welcome back to episode number 91 of the Rose Bros podcast. This episode, we are joined by Rob Zakresky, CEO of Coelacanth Energy. Coelacanth Energy is a pure-play Montney growth company with a land base of approximately 100,000 acres, located in the Two Rivers area of northeastern British Columbia. The company plans to expand production from approximately 400 BOE a day to 25,000 BOE a day over the next 4 years, and began trading on the Toronto Venture Exchange in June of 2022. Coelacanth is Rob's seventh energy company, with his last company, Leucrotta Exploration, selling to Vermilion Energy for approximately $500 million. Rob also graduated from the University of Alberta and trained as an accountant before beginning his entrepreneurial career in the energy industry. We sat down for a smooth cup of Rose Bros coffee and discussed avoiding dumb things in business, operating through all energy cycles, starting another energy company, and why there's still opportunity in Western Canadian energy. Enjoy. Also, this week's podcast is brought to you by Rundle Eco Services. Looking for a way to recycle your frac pond and pit liners used in the energy industry? Rundle collects and processes liners using an environmentally friendly system, leaving a clean environmental footprint. The end use of these liners are shredded and processed into pellets that can be used and extruded into various forms of usable plastic products, including furniture, various building materials, and industrial packaging. Check out rundleco.com for more details on how you can recycle your industrial pond and pit liners today. Hello, Rob Zakresky. Thanks for doing this.
No problem at all, Trevor. I'm happy to be here.
I really appreciate your time. For anyone that is listening, you are the CEO of Coelacanth Energy.
Correct.
What is Coelacanth Energy?
So Coelacanth Energy is a small company we just traded publicly. It's a spin-out of Leucrotta. Leucrotta owned a very large land base in northeast BC in the Montney, one of the biggest land bases actually in northeast BC. Particular from a small producer. We recently did a plan of arrangement. We divided up the company where we sold half of it to Vermilion for approximately $500 million. And then we spun out half into a small entity that the management team is going to take forward and start to develop that asset. So we have about 150 sections, which is a large block of land in the Montney. It's already delineated, and we're going to try to move it into commerciality. As a background, the word coelacanth is an ancient fish. It was dated back to like 400 million years ago, and actually still lives today, as in deep water off of Africa, but it has been everywhere around the world. Its most prolific time, though, was during the age of the Montney, when it was deposited 200 million years ago, and that's one of the reasons we selected that name, because of the correlation with oil and gas and the correlation with the Montney in particular.
Also, they thought it was extinct, but it's not. It turns out it's not. Maybe kind of like the price of natural gas.
Yeah, well, they call it the living fossil. Yeah, because it's a survivor. It's lived through obviously a lot of eras and is still here today in largely the same form it was in 400 million years ago. So it must have had something going for it, for sure.
Yeah, kind of like the energy prices are coming back finally. So
yeah, I mean, energy prices obviously, are cyclical, and there's a lot of capital goes into the industry to produce energy for the world, and it goes up and down with pricing, and it's a tough business to be in. Of course, when you're putting a large amount of capital into the ground and to produce energy, and then your product out the other end is volatile in pricing. So it tends to have large swings up and down because of that.
How'd you get into the energy industry? I think you're an accountant by training?
Yeah, so I'm a chartered accountant by training. I did in-depth tax, so I was a tax accountant for a while as well. And then a handful of us were just sitting around in a bar having a beer, and there were a bunch of new energy companies surfacing up in the late 80s, early 90s, and we're not necessarily a lot dumber than lots of guys out there, so why don't we just do it? And so we said we're just going to raise a small amount of money. Back then, the best way to raise a company was somebody who was technical engineer, geologist, comes out of a Shell, Petro-Canada. Somebody funds them $3 to $5 million, and they find properties and they kind of work from there. we were not quite kind of that era because we didn't have a geologist or an engineer. So there's a tax accountant coming out, we raised only $800,000 to start. At Bellator was our first company. We didn't get any coverage. Nobody wanted us. And our big thing in business was we know we're going to do dumb things because everybody makes mistakes. But we said, don't do that one big thing that kills the whole company. And if you can weave together a handful of good things, you're going to make money over time. And that's what we did. And Bellator was a big success. We went from basically nothing and $800,000, and we were over 12,000 BOE a day when we sold it to Baytex in 2000, and then they took it higher from there. And so it was a great success from there. And then weave through the rest of the companies. SEE-luh-kanth we call it lucky number 7. So we had, after Bellator, we had Coelacanth Energy. Then we went from Coelacanth, we went to Vermilion Energy 1, and then Vermilion Exploration, which is Vermilion 2, and then Leucrotta. And then we went from Leucrotta, we went to Leucrotta. Leucrotta was spun out, and Leucrotta is actually the spawn of a Leucrotta, if you look in mythology. And then we went from Leucrotta to SEE-luh-kanth. And all of them were different opportunities at different times. Bellator was heavy oil, Lloydminster. There was opportunities in Coelacanth where we were Provost in southern Alberta, mid-grade oil. Then from there we went to the Deep Basin, doing various zones at both Vermilion and at Leucrotta. And then from Leucrotta, we started to build a Montney position, and we spun that out when we sold Leucrotta to Long Run in 2014. And then we just continued on with the Montney trend here at SEE-luh-kanth. But as a tax accountant, we're not pigeonholed into anywhere in the basin. We can go anywhere. We just looked for opportunities wherever they were and tried to capitalize on them for shareholders.
When you were starting, and even now, did you have to put a lot of your own money into it? Did you have skin in the game?
Oh yeah, we always put in everything I had. So you can appreciate as a poor tax accountant, I didn't have much money, but I played the market a little bit back then, and I made, over a couple of years, I made $100,000 playing penny stocks. And I said, well, if I'm going to quit my job, I better buy a house. I put $50,000 as a mortgage into a house, and then I put $50,000 into Bellator. And then from there, I just continued to roll whatever money that I had into it, and then some. So even now, I have no money outside of SEE-luh-kanth invested right now because I just poured every last dollar that I had back into the company here. And I moved up in percentages of ownership. Obviously, when you put in $50,000, you're not going to get a high ownership of the company. But at SEE-luh-kanth, I've been able to work my way up to where I own 10% of the fully diluted shares and, a very material piece of this company.
Did you consider yourself an entrepreneur? Did you think of yourself as a kind of an oil man or an accountant, or how do you view yourself?
No, we just wanted to have fun. Way back, even when I was in high school, we used to joke that, the financial guys, they don't create the good idea. We just take somebody's good idea and we make money off of it. And so that was kind of the joke. And so what I always wanted to do was go in and buy or take over other businesses where you could help them turn around, where they had a good idea, but maybe they needed some other business capabilities or financial capabilities, and I could help create profitability out of a good idea. And so we just kind of fell into the oil and gas. If you look into the early 90s, there was some capital coming in. There were lots of wee little startups. Guys are buying properties off the majors. And we just said, hey, let's just join in and see what we can do. And so it just kind of fell into the opportunity. We created it, but just the surrounding environment made it allowable for us to do that, and we did. And it was fun.
Did you view it from a capital allocation perspective in terms of where the best value is for your money, or again, was it just kind of a fun project?
Yeah, it was. When we started, we had no properties or anything. We had $800,000 cash and promises to our friends and family that we, try to steward the money as best we could, and hopefully, we make something out of it. And so we just started seeking opportunities. We started a little bit in southeast Saskatchewan and did a couple of horizontals out there way back when in the Elida. And then we found opportunities to consolidate in the Lloydminster area. Technology had changed at that time where they went from old conventional pumping systems to screw pumps. That was a big technological change back at that point. And heavy oil went from very difficult to a lot easier to make money on. And a lot of small people, the farmers, et cetera, had bought lands off of the majors where they were just getting rid of them. And then they had these small businesses where they were pumping them, and we were able to go in and buy those, give those people shares, and they had a big windfall off of it. And then we applied the new technology and were able to take the property from there. So it's just finding the opportunity, then inserting yourself into the middle of it. And that's what we did at Bellator.
A lot of times in the energy industry, it's kind of run maybe by a geologist or an engineer. Did you find it's difficult to run an energy company without the technical background, and did it matter?
Well, you had to learn a lot of it. So you had to definitely get in and try to understand it. Whether you have an engineering background or a geological background, you still have to understand the business and how it applies. So I kind of understood the business side of it better, and then I had to learn a lot of the technical side as you went along. And it's a risk reward. So if you understand the geology, you can understand what the risks are, and then you can piece together the reward of what you're trying to accomplish over a larger scale project. And same on the engineering side. But yeah, so over the course of 25 years of working through it, you do have to learn a lot of geology, understand the engineering, and as long as you're open to it, like, it's no different than going to university and learning geology. You're just not learning it in a formal course.
You've had 7 companies now. You don't really have to work anymore. What motivates you?
Well, obviously it's fun. You have to do something. I like what I'm doing. I do have the flexibility to do a lot of things outside of it. I have a family that the kids are young teenagers, and they're going to be in school for a while, and I'm certainly not looking to retire at all. I actually know a lot of friends that are older than me that went and they said, we're retiring and we're going to golf 200 times a year. And then they come back the next year and go, we're going back to work because you can't golf 200 times a year. And you have to do stuff, you have to keep active. And I really like doing this. And I like the stock market, and I like investments. And so I find it a lot of fun and invigorating to do it. And then outside of that, you blend in all your other hobbies that you like to do.
When oil went to zero, gas was at maybe $2. Did you think to yourself, maybe I don't need this stress anymore, and I'm just going to retire and forget about it?
Yeah. No, well, first off, I was always heavily invested, so
yeah.
At certain times I may not have been able to retire. But when it's just a challenge. The industry's cyclical. You have to get through it. At the first company, I'm going to go back to Bellator, but that was, I think it was The Economist, the world is awash in oil, and oil is going to be $1 a barrel, and that didn't last very long. But we were, at that point in time, we had debt drawn at Bellator, and we had to use the forward curves to pull back, forward sell even up to 5 years on some of our oil to protect the balance sheet. And then as we went from company to company, it was always, we learned you got to protect the balance sheet. And at Leucrotta, obviously there's the downturn on the gas side too. But we carried like virtually no debt. So even in the pandemic and low prices and various swings, we were not in any financial trouble. Yeah, the stock oscillates up and down, but the business itself was still sound.
Profitability, cash flow, things like that.
Yeah, obviously we weren't as profitable, but we weren't going to be taken under by banks who want their money back.
Natural gas has been lousy for 10 plus years.
Yeah.
Kids have grown up in that time. It's a long time, but it's rising now. Did you ever think it would come back this strong, or how do you plan for that?
When you watch LNG around the world and you're trying to draw the analogy to oil, where oil is easily portable and you can move it from place to place on ships, you can use it as fuels, you can carry it, etc. Gas was not mobile, so it was pipeline-oriented North America. North America was a market, Europe was a market, and there was small amounts of LNG. As you looked at the vision of the world, if it became kind of a world commodity where everybody wanted it and could receive it, then you're saying the boats are going to normalize the pricing. So where low prices are, more LNG would come out, and then those prices would rise, and it would moderate the overall effect. So I always had that view from when LNG was going to be starting in Canada and North America that would happen. Now, did I think it would happen, take this long? No. You don't know where the price will be around the world as where it would moderate, but it was definitely going to be higher than $1 an M or what people could extract it at, or they wouldn't do it. So the pricing right now is strong. Economics are strong. Could they oscillate up and down? Absolutely.
Do you think the bar has been raised in terms of natural gas pricing, or is it just kind of this another cycle?
I think for North America, it has raised. I think we're not going to see the lowest of the lows, at least for extended periods of time. I think it'll have a higher band of up and down now in North America. And the more LNG that we have off the Gulf Coast, and if we get Canada going with LNG Canada, that'll help Canada Gas, because we're at the end of the pipeline per se from a North America perspective. Working forward, if you say world price is going to be, say it's $10 an M, or we're going to be $10 an M theoretically minus the transportation of LNG at Henry Hub in North America. And if we produce more gas, it won't necessarily be trapped. We'll be able to sell it. So I think that's the big advantage, is you're not going to end up with molecules that cannot go anywhere on a go-forward basis. And that'll help the bottom end pricing.
And LNG is the kind of catalyst for that.
It is. It's going to moderate the world price because it allows the commodity to flow from market to market. And when you look market to market, there's arbitrage opportunities. And so you're going to buy it in the cheapest market and you're going to sell it in the highest market. And then all those moderate.
Is demand rising too at the same time, or is supply decreasing? How does that factor into it?
Well, again, from a North America perspective, gas production has been fairly stable. There has been, push for energy companies to pay money back, to buy back stock, to not increase production. And that has had an effect on the production side of it. And then, of course, a lot of countries around the world are wanting to accept more LNG. They're trying to cut back on coal or other heating products if they can. And so they're building more LNG receipt points, and that's allowing us to then deliver more. And from our perspective of Canada or North America, we need to build out more so we can deliver to more markets as well. But the overall commodity is going to be received, at least over the next, I would say, 25 years. It's going to increase as a fuel around the world.
I just remember reading about BCF here, TCF there, discoveries, and it seems like there's just so much supply, but maybe with the LNG expansion and increasing demand everywhere, that you can really soak up that extra natural gas.
Well, there is lots of gas. It's what's the cost to extract it, and what are people prepared to pay at any given time for it. It's simple one-on-one economics, supply-demand curve. And if people aren't prepared to pay a certain price for it, then all of a sudden you can't produce it. So it has to go up, and vice versa on the upside. So there is lots of hydrocarbons around. There's lots of gas. There's lots of oil. That's not the issue. We're not running out. It's just what price can we extract it at and deliver it to markets for.
Did you ever think oil would come back to $100 a barrel, or is it the nature of the business?
Yeah, I mean, again, there's lots of oil around. It's what the price how can you extract it and at what price? And then how can you deliver it to markets? And I did not necessarily think oil was going to hit $100. I more look at the bottom end saying you can only produce it a barrel at so much a barrel, or put capital in and you need a return, or you stop producing it, and then that starts a new cycle of higher pricing. And that's what's happened here, is that over the last few years there has not been any new capital expansions around the world to deliver any meaningful amount of oil. And even for the foreseeable future right now, as I said, most companies had pressure to pay back cash, to not reinvest it, and that has had an effect on the world as far as the production capability. And world demand has been fairly robust and appears to be increasing generally. And so you have a increased demand and you don't have the supply there for it. And that has created the $100 oil price.
Maybe a year or two ago, did you look around, and as someone who's been in the industry for a long time, did you start to see less people drilling and the production not growing as quick, and kind of notice that trend and the demand for less growth, and maybe see that there was going to be a supply shortage?
For sure. Well, in the public markets, which we were in at Leucrotta, you have all the research, you get all the data, and you see the pressures of companies not to drill, not to produce more. And that's in the public realm. That's not in, say, Saudi or Russia, where they're not public entities per se. But in the Western world, yeah, you'd seen those pressures, and you knew that we were not going to supply more oil. Then the question became, well, how much does Saudi have? If demand goes up, can they produce any more? Can Russia produce any more? And my whole thesis was, why aren't we producing more? I mean, we environmentally, we're the best in the world, from CO2 emissions, from all the metrics, social, et cetera. Canada and the U.S. are some of the best places in the world you would want to get your oil, yet we're stopping ourselves, per se, or, because of movements to stop the production of energy. But yet it's not stopping the demand side. So we're just now, in my opinion, there's a wealth transfer to other nations that we could make Canada much more wealthy as every citizen in the country by producing our clean energy and delivering it to the world. But if we don't do it, the world's still likely going to buy it. So they're going to buy it from other nations, making them wealthy, who maybe have poorer social records or, poorer environmental records. And it seems silly, but that's what we've done.
Rewarding the bad actors.
Correct.
Lately, it seems like the markets have shifted towards demanding energy companies reward shareholders more and give capital back to shareholders in the form of dividends and buybacks. I think SEE-luh-kanth is a public company now. Have you guys had to shift your perspective on how you manage the capital and what you do for shareholders?
No. I mean, we're a small entity. Our pure push forward is growth. So we're only 400, we spun out, we're only like 350 BOE a day right now. And we're looking to be 25,000 within 3 to 4 years. So the growth profile is going to be tremendous. Obviously, we're not everything for everybody. We will resonate with certain shareholder base or certain investment funds who want that large growth. But those that want us to spend all our money buying back shares and paying out dividends, we're not going to be for those particular investors.
Because most companies are doing that nowadays, the big ones. It's not for everyone, like you said. So that's kind of been your message to the market, obviously.
So yeah, investors might want a portfolio of different things, and there has been a kind of a macro shift. Yes, pay out more dividends, do more buybacks, give more returns back to shareholders, but in that case, those returns are not necessarily as good as if we are able to reinvest in our own projects. If I look at the forward strip right now and I look at an average project, our rates of return are 200 to 400%. And you go, well, if you could reinvest that money for your shareholder, why wouldn't you give him 200 to 400% internally, as opposed to returning that money and paying a 3 or 4% dividend?
Is that a tough sell to the average investor, or do the numbers just speak for themselves?
Well, investors will look at it and they'll make their own opinion whether we can accomplish that. Obviously, we're a small company, it's high risk, and we have been able to execute in the past. So some investors will bet on us that we can execute the plan that we've put out. And then you look at the growth side of it, and some investors really want that and others don't. Some investors will naturally attract certain investors, and over time, if you have a clear message as to what you're doing with the company and how you're doing it, those people who own your stock currently and don't like that trend will sell your stock because it's public. And those people that do like what you're doing and your business plan will buy the stock. So naturally over 2, 3, 4 years, as long as you're clear, you will attract the investors that you want to attract that are aligned with your business plan.
Retail investors, institutional investors, do you have a preference?
We have been largely institutionally held over the years. Not like we like to have retail investors. You'd like to have both because they're both very important to have. But we can only do what we can do. So if retail investors like our story, they will buy the stock, and we're more than happy to have them. And the same with institutions. And we see institutions, they will rotate out of stocks. They'll have different mandates. Years ago, there used to be pure oil-focused mutual funds. Those are kind of gone, and they're all mainly generalists now. There are a few oil-specific ones or gas-specific ones. But the funds per se are going to rotate in and out. Relationships rotate in and out. I might have a good relationship at a certain fund, and then he may be gone to a different fund. So that fund sells my stock, and the new fund might buy us or not. That's the public market. You have a continual rotation of shareholders. Some will be with you there forever, and others will be there with you for 5 minutes.
Yeah, exactly.
And that's fine.
There's no real preference. At the end of the day, it's whoever wants to buy the stock.
Yeah. You just try to be clear. Yeah. And if they like what you're doing, they stay with you for a period of time at least. And we're happy to have both of them.
In terms of technical analysis and or capital allocation, good management, time the commodity cycle right, is there a part of the business that you think is more important than the others? Do you kind of lean in towards a certain style in running your companies, or is it all of it put together?
Well, you have to balance the risk reward. That's the biggest thing. You do have to have a view on commodities, but you can't just say my view is going to be correct, because a lot of times it is not correct. You get all the information you want, predict an oil price, and then you're wrong. So you do have to moderate your business plan. We stay fairly conservative on the balance sheet side of it, just given that we've always been small entities, and you're more subject to turbulent business times when you're small. So we try to be conservative on that side. You try to be more aggressive if you can see a good window ahead of you from a commodity cycle, spend a little bit more capital per se. But it's really just managing the growth of the business on a moderated basis. That's all it's about.
I had, like I said, Colin from Tourmaline on the podcast, and they're obviously very technical weighted, but his comment about the leadership was they're very, very good in the markets as well. So it sounds like it's kind of a mix of all parts of the business in order to run a successful energy company.
Yeah, I mean, Tourmaline has obviously a very strong management team. They're a large company. They're entrepreneurial in nature, and they've done a great job over the years, technically and on the business side, and identifying opportunities and making smart acquisition. You try to emulate what other smart people do. And we try to run our business similar. We try to be opportunistic. We try to make calls and be aggressive when we should be aggressive, and not when you shouldn't be. It's no different than, playing a hockey game or a football game. At certain points in time, you have to make calls how you're going to play the game.
You've sold about 7 companies now, so that's a lot of success. Did you ever think of holding on to one or two of them just to see how big it could get, like a Canadian Natural or something like that?
Probably our best skill set is growing it to a certain level. And at a certain point in time, it becomes a change in how you manage it as well. You have to bring in more people. You diversify the decision making, becomes, from an administrative perspective, much more difficult. And I believe that there's a changeover at this number of people. Now, the Montney is a different perspective, because it used to be companies that were 25,000 BOE a day would have, say, like hundreds of people, because you have multiple areas. the average well was small, and you just need a whole fleet of people to manage that. Now we have 12 people here, and we could probably get to 25,000 on 20 people. And so it's like you're huge, but you're not. So I don't have the view that I want to be running a Canadian Natural with thousands of people around, but it doesn't mean we can't be 25, 50, even 100, where you're still a small, tight group. You're just managing a large project.
Making a lot of money with the resources that you have instead of getting big and bloated.
Yeah, and it's not even big and bloated, but it's just
right.
a different style. It's a different way to run business. And as a CEO, I think you have to know what you can do best. Could I run a bigger company? Possibly. I've run smaller companies very effectively, and so I'm comfortable doing that. And I think this one's going to be highly successful. I mean, over the last 6 companies, I could name tons and tons of mistakes that I did, and hopefully you learned from some of the past mistakes, and you make every company just a little bit better, and that's what we're trying to do here.
Have you, the last, I guess, 6 months or so, seen a shift in the view towards Canadian energy with invasion of Ukraine and macro things that have gone on, or?
Yeah, I mean, there's a definite shift. The spotlight has come off a little bit on the CO2 and emissions because of the lack of product going into Europe, and people is going, look, I don't want to be without energy. The sales from the governments to the people was that we're going to shift, but you're never going to be without, and it's always going to be cheap. And that is, in transitions, that's never really the case. You're going to have increased costs, and you might have periods where it is not reliable. And the Ukraine has exacerbated that, obviously, with Russia saying they may shut off some of the gas, Europe saying they're not necessarily wanting to buy it, have to shift where they're buying stuff. Renewables are not, at this point in time, cannot take up the slack for that lack of energy deliverability. So I guess from a media perspective, a lot of that noise has shifted away from climate change for now and gone on to, we have to make sure that we can deliver energy to the people.
I've read some of the bigger funds and investors are maybe looking back towards Canadian energy, whereas the last few years they've ignored it.
Yeah. Again, push from media and shareholders to say we don't necessarily want to invest in fossil fuels, and there's a push away from that. But I think there's a realization now that while we want to reduce pollution and we want to do the best we can, at this point in time, we can't completely go off of fossil fuels. And there's a place for fossil fuels within energy for the world. And we can do a better job go forward. And we have in producing that and delivering it to the world. And I think for the next, I don't know how long it will take, but fossil fuels will probably be in the mix long after, I'm not here anymore.
Are you building your business plan on the expansion of LNG, or is it at these prices, doesn't matter?
Yeah, I mean, LNG is great because it will elevate North American markets. If it doesn't elevate it, it will at least stabilize them, and we won't have the whipsaw effect of very, very low pricing where you're producing your product and losing money. So I think that that's very positive. We're not building the business based on LNG. I think that overall it's going to help us. There's 2 parts to our business. Obviously, we've been acquired 6 times, and this is number 7. At some point in time, we'll likely be acquired. From the base business perspective, we're looking to just grow it, grow the cash flow, grow the value. And we know that our land base is well beyond what we could do anyway over the next 5 years. At some point in time, there will be an M&A opportunity where somebody will knock on our door and go, we really want to own what you've built. And, as a CEO, my job is to ultimately create value. And if there is a material value gap between what we can provide the shareholders and what somebody else will pay the shareholders, it's my job to be fired.
Did you ever worry that you wouldn't sell? Because sometimes there's companies out there that just maybe hang on for forever, it seems like, and don't sell. Or were you always confident that somebody would come along and knock on your door?
If you build a good business, there's always somebody's willing to buy it.
Really?
Yeah. And that was always our view. Just build a strong business. You don't want to be acquired in a down cycle. That means that you've had too much debt, you're in trouble, and somebody's taking advantage of that perspective. But when you sell in a normal to an up cycle, it means you've created a strong business that somebody else believes they can take forward. In this particular case, we believe SEE-luh-kanth can grow to 25,000 in our 3-4 year window. And then from there, we could grow much bigger. But we're not going beyond kind of a 3 to 4 year perspective. Like let's get our own business plan done, and then we'll talk to shareholders about what we can do after that. But the project itself could go to well over 100,000 BOE a day if I look at the expanse of the resource we have. So if we're at 25,000 and somebody goes, look, I can build it to 50,000 over the next 2 years, and you can't, there's a lot of value for shareholders in pulling that present value forward. We create a strong, sustainable growth business. There will be suitable.
The Western Canada basin is very mature. Has it been difficult to find those assets that leaves a lot of growth for a potential buyer?
No, I mean, technology has opened up everything. Way back in the 90s, you had exploration, you were trying to find small pools. You're trying to find very porous rock that could deliver hydrocarbons. Some of those were smaller pools, and then we moved to smaller wells on the gas side, shallower. But technology moved to where we can extract oil and gas from very, very tight rock. I used to laugh that when I was at high school, I thought of an oil pool as a cavern underground that they just put a straw in and suck the stuff out. Yeah. And now I look on the side of houses and go, hey, we can extract oil from, that limestone on the side of that house if it was in there. And technology has moved so far, and we have so much data in the basin penetrated that we know where the oil and gas is. And the Montney is like a massive, massive resource. It's 200 and some miles long. It's 50, 60 miles wide. And there are other resource plays similar to that in Canada. And technology's opened it up for us to extract that. And, when I was reading some research the other day, we were talking about what inning are you in Canadian oil and gas. And one of the guys said, well, realistically, you've probably only in the Montney, you've probably only thrown the second pitch to the first batter, if you're looking at it that way.
I haven't heard that before. I guess your conventional view of oil and gas is that like the Beverly Hillbillies gushing from the ground, right?
At some crude and up through the ground came the bubbling crude.
But in reality, it's changed a lot, and technology has really opened up what.
Yeah. And so we've always known you've taken all this data and collected all of it, but technology was not allowing us to extract it. And now you have these vast resources we can extract the oil and gas from. And, it's had an effect on other things as well. It has an effect on Calgary, downtown, jobs in the city, in that now a small company like us could produce 50, 100,000 BOE a day. So you don't need the number of people. You don't need the number of technical people either. So it's certainly had an effect on Calgary from that perspective as well.
But in terms of economics, the returns are still there, and it's still possible to make a great business out of an energy company at the end of the day. Yeah,
the returns are definitely there at these prices. And technology has allowed us to extract more for less price and make things even more economic than they are. So I think the future is pretty bright for Canadian energy, assuming we're not going to stop ourselves from providing it to the world.
Maybe that's a industry viewpoint, but that seems very unconventional from like a lot of the mainstream media would kind of say Canadian energy is sunset industry, but it's not.
No, it's not. And it would be sunset from the perspective if you want to eliminate all fossil fuels from the world. It's not a sunset from the ability to provide energy to the world and at a reasonable cost. We definitely can do that.
And make money.
For sure.
That would be an insight. That would be like an industry viewpoint that maybe a lot of people don't know about?
Anybody looking at an industry, if you look at it hard, you'll know what all the drivers are and you understand it, whether it's automaker, oil and gas, or anything. Oil and gas is somewhat is technical, and people think it's more difficult than it is, but it's not. You can look at macro, you can look at the cost of a well, what it's going to extract. You can predict the value at any given commodity price. It's simple math once you have a view to what a well costs and what it can extract. And those numbers might go up and down slightly, but in vast resource plays like the Montney, they're just small pluses and minuses. And so you can definitely predict that.
Maybe a little harder for the average entrepreneur to start in the energy industry now because it takes a lot of money to do something like you guys are doing.
Yeah, much more difficult. We started with $800,000. Just even from a regulatory perspective, we were a public company. We started at $800,000, and it's hard even from the regulatory perspective. All the filings you have to do to have even G&A less than a few $1 million just to be up and running. So that's that side of it. And then you look at the pure technical side. If you're building something publicly to grow that is going to end up being acquired by somebody, you have to be in plays that they want to own. Well, the plays they want to own, our average well, $6 million. Those are the plays they want to own. So to start now and have 800,000, 5 million, 10 million is just simply not enough to get going. Now, privately, there are always opportunities too, where you can buy old wells and engineers, you can tweak them, you can add value that way. There's plays, you can still drill small verticals, and there's still value to be created there. But if you're going to go into the public market and try to raise significant dollars or to do a play, very, very difficult today. And you see that in the market. Like how many small companies are public out there? A lot got decimated in the pandemic and got consolidated. There was a lot of capital came in from U.S. private equity funds. A lot of that has exited the Canadian basin. And then the publics that are left have largely consolidated and got bigger and bigger and bigger. From a Montney perspective, I don't know if there is anybody that's smaller than us. We got a giant land base we can build into. But from a market cap perspective, off the top of my head, I can't recall a smaller Montney player out there that's public.
If somebody wanted to be an entrepreneur in the energy industry, what would you tell them? Like we were just saying, it's very difficult nowadays to go out and just be an entrepreneur in oil and gas. Would you say go work for somebody for a long time and study the basin and then maybe you catch a break down the road? Or what would you tell somebody?
Oh, just say go do it. Go do it, try it. Like, what's the worst thing that happen? So you need a certain amount of capital. You have to find a property. You have to have a good idea. And even if that's buying some abandonment liabilities off somebody and saying, hey, I understand these are abandonment liabilities, but I think I can get those wells back producing. I think I can make money. I think I can expand. You have to have an idea what you're doing. But if you want to be an entrepreneur and you want to be in oil and gas or whatever, you just have to go do it. There's no secret sauce to it. It's a lot of hours, but if you love what you're doing, then you just keep working and working and working. And for a lot of entrepreneurs, they're successful because of that. They love what they're doing, they work hard, and they find a way.
Do you see opportunities in the Canadian energy sector still for people maybe trying to start out and be an entrepreneur?
Oh, for sure. You look at the size of the industry, and there are multitudes of plays. There's tons of wells out there. People are constantly trading properties, selling properties, buying properties, moving things around. There's new plays. It's a very vibrant industry. When you look from a public perspective, yeah, it's hard to penetrate that because the public markets want a certain play, or they want something that every entrepreneur can't give them. And if you're just starting out as an entrepreneur, the one thing you're also going to have difficulty with is capital. So we had $800,000, and so capital became easier over years as you've shown a track record. But if you start out with a small amount of money and an idea and you make it work, then you can show capital, hey, I made this work and now I'm going to do more of that, or I'm smart enough to see an opportunity. So you just have to try to find enough capital and good idea and just get going.
But nowadays, 800,000 might be 8 million, which is very hard.
Yeah. If you want to start out and you want to go in the Montney, it's probably $100 million realistically. If you're trying to buy land and then delineate, and then, that is a more difficult play from capital perspective. But I do know, a couple individuals who wanted to start out, very entrepreneurial, young guys in the last few years here. And one of them went out and he got some old wells from somebody who said, look, I just got to lower my ARO score, and gave him these wells that were still capable of producing. And he took them, he made them better. And he made a bunch of money off those, and now he's going to expand his business. And he actually started with zero. All he did was he assumed somebody else's possible liabilities and was able to take them into his own name.
That's cool.
Yeah.
You don't read about that as much, but obviously it still exists.
It still exists. That's all on the private basis. And,
right.
And if you want to go from there and you have a track record and you show capital that, eventually you may not want to be public. Public markets aren't for everyone. But if you continue to do that, you can grow your reputation, you can grow the business, and you can just continue onwards. So we've done it 7 times now. If you're an entrepreneur and you can identify opportunities, you just go and you do it. And that's what I'd say to anybody who wants to go out there. Don't say you can't do it because you have no capital. You can't do it because you don't have an idea. You have to just commit to it and figure it out.
You've had a lot of success as an energy entrepreneur. What advice would you give to someone starting out now, or maybe things not to do? Do you have any things that you would say? What has worked for you?
Well, things that have worked for me is trying to limit the exposure of all the dumb things that you do. So that's the key. You want to do some smart things. You have to be able to do a handful of smart things and not too many dumb things. And then the averages weigh out and you'll be successful. Like I said, the biggest thing that I did personally was I did not do one big stupid thing that killed the business. I didn't take a bet that was so far out there, drilled a $25 million well. It was dry when you couldn't afford it. Things like that. We didn't go outwardly on that kind of risk level. You do make wrong calls in commodities. You make wrong calls in hedging and everything all the time. And we just simply did some smart things along the way that allowed us to continue on and make money. And I would say that to any entrepreneur, just any decision you're making, don't worry about your decision. Look at the exposure. You're going to make mistakes. But as you analyze decisions, try to make some smart ones and try to limit the dumb ones, and you'll be fine.
That's awesome. That's a great conversation.
Thank you. Thanks for coming in. I really appreciate this.
Thank you very much. Not that you need exposure, but if anyone wants to learn about SEE-luh-kanth, where can they find information about the company?
Yeah, we do have a website at SEE-luh-kanth.ca, and there's a presentation there. It has a bunch of the background. We're going to be building it out a lot more over the next few months here because we're just brand new. We are picked up by a couple of research firms right now. So there's some research out there. Haywood Securities has research out on us. Cormark Securities has research out on us. And there are other firms that are looking to add us to their research base. So we hope to get more exposure, and then you'll get more autonomous research from other people to have their opinions of me and of the company, as opposed to just listening to me talk.
This is very retail. This is about as retail as it gets. So,
oh, that's awesome. We've opened up on the website. We have a HubSpot. So we do have a connection to all our retail people who want to sign up. They're getting continuous flow of information. We're trying to be, I guess, more open to the retail market than in previous companies where we're largely institutional and we didn't have as big of a retail following. Not that we didn't want to, but it was more difficult to access retail in the past than it is now.
Well, this is one way to do it.
That's awesome. No, I really appreciate it. And thanks for coming in and doing this for us.
We'll wrap it up there. Hey, thanks for listening, everyone. Hopefully you enjoyed the episode. If you liked what you heard, check out rosebros.ca, where we will have upcoming shows. Until next time, happy coffee drinking.